Now that we hit our target of 58.30, which we discussed in a previous video, where do we go from here from next? Now, if we work where we said we were going to be, this was the sort of bear flag, right? That now looks like is turning out to be more of that inverse head and shoulders that we had mentioned. So this is the bottom. This technically is where I wanted to see the right shoulder work out into 58.30. But what I really would like to see is for this to get a little wider. So for us to retest here at 55.70, reject, come back down, maybe CPI or the jobs report, come back down to 55.70, grab some liquidity, and then off to the races, break out 58.30, go back to 6,200, and then ultimately my target of 6,500 plus. But what I want to see first is a back test, right? It's not that we can't go, we broke out of 58.30. And I said to everybody, once we go 58.30, we're going 60.50, we're going 6,200. There was no tariff talk. This was looking like a clean inverse head and shoulders when everybody was telling me, hey, we're going down. I said, guys, that's not how the market works. This was becoming one shoulder, the head. Now we're working a very small right shoulder, but ideally, like I said, I want to see that this this comes back and we'll retest the 55.70. Otherwise, it can turn out to be that if CPI turns out bad, again, we reject here, this can turn into that double top that we already had mentioned. One way or another, the market's going to want to find liquidity, either 5,600 even to come back and test this trend line maybe on Monday the 19th, or come back on 55.70, come under and get a little bit more liquidity. Ideally, I wanted this test, the 55.30, 55.15, an overshoot to finish this inverse head and shoulder, and then off to the races. Because I said it is bull season. There's nothing bearish about the market. That we were, while this was a bear flag, we saw this compression. We broke out of a clean bull flag, and that gives me the indication that the market was getting ready to go to the nosebleed section. But again, we want to have a retest of liquidity. What you don't want is the market just kind of running away on its own, and then we don't get any type of pullback or anything like that. So what I want to see ideally is a retest again of the support that caused the liftoff, right? I want to see this come up here to 58.30, come back down, give me a little bit of a bull trap going into maybe Monday, maybe the jobs report, but let's just say Monday, worst case scenario, come in, get a little bit of liquidity here, and then go off to the races into, for example, June. Actually, by June OPEX, I believe we're going to be up here, and then we're going to make a low into the first week of July, come back, and then make all-time highs by the July OPEX. So I think it's going to be a sharp move up and a sharp move down. So come up here, reject, go find liquidity, make a new high into the June OPEX, come back again, and then go off to the races. But again, one level at a time. Make sure that you know your levels. You don't want to be going long. I mean, you can go long on a breakout, but what I usually like is I want to see a back test of a support before I just start going. So I don't want, you could buy the breakout, but I want to see some sort of back test. I'd rather sit on the sidelines, let market makers get liquidity, and then take my long, because they already showed their hand. We're going higher, but the market is running dry. There's so much resistance up here. The market's going to want to get some liquidity and then get everybody out now that there's no tariff talks. The next thing is now price shocks. But if you want to learn how we do it, comment course below, and we'll show you the AI, the tools, the trend lines, and the dark pool that we use to be able to beat the market.